What up? It's your boy Jay Sing, aka Gigabands with the bands though. And today we got a very special guest. The one, the only. You know what I'm saying? My right hand man. You dig? So I'm gonna go ahead, let him introduce himself and we'll get to it. Yes, sir. What's going on, man?
Not much. How you been?
I'm good, man. I'm good. Blessed. You feel me? You feel me?
Yep.
Hey, man, before we can get started, you know what I'm saying? Go ahead. Let the people know who you are, man. I mean, you ain't got to use a government name or nothing. I mean, just, you know what I'm saying? You know what I'm saying? Just
Yeah.
tell them what it is, man. Oh, actually,
So,
it don't matter. It says your name anyways, and it says mine. Damn.
yeah. Oh, that's true. So I'm the ensemble, like it says right there.
Yeah.
And this is my cousin. It's right there. It's my
Right
cousin
there.
Jason.
Yeah.
And he's just gonna show me some stocks and show me how to get wealthy.
Oh, so you want me to show you some stocks? I thought you chose one already.
Oh, I did.
Ooh.
But this is the journey. Journey is
It is the journey. It is the
show
journey.
me some more stocks.
So for those who don't know, you know what I mean, what dividend stocks are, or dividends in general, you know what I'm saying? I got a layout right here, you know what I'm saying? So your boy is fresh and not just 100% off the dome. So it says a dividend is a distribution of profits by a corporation to its shareholders, which is you and me. When a corporation earns a profit or surplus, it is able to pay a portion of the profit as a dividend to shareholders. Any amount not distributed is taken to be reinvested in the business. So, you know what I'm saying? That's what we're here to do. You know what I'm saying? Make that money, make those dividends, and take it, put it right back into the stock, and then, have that snowball effect, keep adding, and take it straight to the top. You know what I mean?
Yep.
Take it straight to the top. So you what stock did you actually decide to go with?
So you gave me a list of a couple to write down. And I had down Stag, O, Triple M, and QYLD.
Okay.
And you gave me Seeking Alpha, the website.
Mm.
So I went in there, did some little research, and I went with O.
Okay. So you went with let me go ahead and pull up my paper or my Excel spreadsheet. And let's take a look at O.
It was between that or Stag. That was my two.
I mean, both of them are pretty good.
Yeah.
So I got O pulled up, and where's Stag? All right. So as of right now, O is trading at $66.83 a share. They've been, from the last time I did the research, you know what I'm saying? They've been consistent with their dividend growth over the past 26 years, yielding a 4.41% dividend yield. And then Stag right now is trading at $40.04. You know what I'm saying? The last time I checked, they were growing, 7 years in dividend growth, you know what I'm saying, with the straight consistency. And like I said, the last time I checked, they had 3.66% in the dividend yield. And then so, last time I Googled, it said that for dividends, you want to keep, for security, you want to keep it between 4 to 6%. Yeah. You know what I'm saying? Anything, a little higher than that, like at least 10, especially with one of the ones that I'm invested in right now is ORC, which is Orchard Island Capital. And their dividend yield percentage is through the roof. It's last time I checked, it was 19.47%, which means that the dividend consistency is not the best. So one day they can be trading at, or not trading, but giving back a dividend of, let's say, $1. And the next thing you know, they're not doing so hot. Then it drops from $1, cut that in half, 50 cents. And so it's very sporadic. So, but let me update this real because I bought another share yesterday. So, eventually, if they're not doing so high, or they even cut the dividends. You know what I'm saying? I'll just take my losses as a grain of salt, and then I'll, flow that money elsewhere.
Yeah.
So you said that you are going to go with
Oh.
All right. Let's get back to business. All right. So $66.83. Their annual payout, last time I checked, was $2.96, and they pay 25 cents per share owned, and their monthly dividend stock. So for you to get $50 from them a month, you're going to have to at least invest $13,546.62 as of right now to get $50 back. And with the price always changing, the price can go up, the price can go down.
Mm-hmm.
So this is season 1, episode 1 on the dividend journey. And you picked O, which is Realty Income Corporation, which let's dive into them a little bit. Let me see here. Actually, I know I got a book. No, I wrote it down. Because I know O is a REIT, which is Real Estate Investment Trust.
Yeah.
So let me see. O. Let's see if we can pull up their information. See if it'll take us to a main page. Oh man, it's not even letting me do what I want to do. Oh my goodness. Okay. Realty Income, Real Estate Investment Trust Company. Realty Income Corporation is a real estate investment trust that invests in freestanding single-tenant commercial properties in the United States, Spain, and the United Kingdom that are subject to the N leases. That's another stock that I was looking into not too long ago about, dipping into. The company is organized in Maryland with its headquarters in San Diego, California. You know what I'm saying? Shout out to the West Side, California. But so with you choosing what actually made you decide to go with O instead of anything else that's out there in the market right now? For the most part, from what you've seen on my list, you know what I'm saying? What was it that caught your eye for the most part?
Yeah. So when I talked to you about a week ago, you gave me 4 of those stocks I mentioned earlier: Stag, O, Triple M, and QYLD. And I just looked at the same facts that you looked at. I looked at their dividend yield, the annual payout, and their dividend growth. And then I saw, how much the amount they give out per share.
Yeah.
So therefore, I immediately crossed out Triple M because their share is $146.
Mm-hmm.
And
so a little bit out your price range.
Yeah. So I wanted to buy a couple more shares a little faster.
Okay.
And then QYLD didn't look very consistent. So then I went from Stag to stagging up those two.
I got you. QYLD, is also a monthly stock. You know what I'm saying? The dividend growth. Last time I checked it, was at 3 years. It's fairly low. It's not the cheapest one out there, but it's a little cheap. I mean, I guess anything over $1,000 to a normal person, is not cheap. But looking, at the flow chart that I built, it's the lowest one out of all the ones that I've had, because right now the lowest one I have is 2,000. Let's just say 2,800. All the way down to the most expensive one, or the highest one on my list, is 109,000. So those right there are what you want to get to later down in the road. You know what I'm saying? Once you built a decent portfolio and, you want to dip into something bigger. So 3M is actually a quarterly stock. If I'm not mistaken, if I just do Seeking Alpha. By the way, this video is not sponsored by Seeking Alpha by any means. So, you know what I'm saying? It's just a good source to use when it comes to looking at stocks. So Seeking Alpha, it was 3M. All right, dividends. Yeah, so it's a quarterly. They pay out $1.49 per share. So quarterly, well, let's go with monthlies. They pay out every month on a specific day. It has a declared date and then it has its, payout date. Quarterly is every third month out of 4 quarters of the year. So you got what? January, February, March, first quarter, April, May, June, second quarter, July, August, September, third quarter, and then what is that? What I leave off at? Man, I lost my train of thought.
You stopped at September.
October, November, December. Yeah, is fourth quarter. Slipped my mind. But yeah, and then you also have your biannuals, which is they pay out every 6 months. So that's twice a year. And then you got your annuals, which pay out every year or every, end of year. So, but yeah, man. So you chose O. It's a good way to start out. It has 25 years of dividend growth. I said 26 when I was speaking on it previously from my list. Where is O at? Oh, yeah. So for some reason it dipped a year or it had incorrect recordings on the website. I'm not 100% sure. Probably have to do a little bit more research on that. But yeah. So 2 heavy hitters. You got your dividend aristocrats, which are the stocks that have been paying consistently over the last 25 years. And then you got your dividend kings, which have been paying out for the last 50 plus years. So your boy has, eyes on both, your day-to-day, dividend stocks from zero growth all the way up to, 24. And then I also have, from aristocrats to kings all the way up to, 60 plus years. So I have eyes on them all. And, since it's not my journey, from when I started my journey, of course, everybody starts, getting $0 back. I changed my portfolio from, regular, just, investing, put money away and forget about it, to where I was doing day trading, where I was making about, a crazy amount. I think the highest I made in one trading was about 1,500 off one trade. And then I was like, you know what? I with me working, I can't really day trade or keep an eye on it. So I was just like, let me just do something different. While I'm working, I can have my money work for me as well. So that's when I switched over to, dividend stocks. I changed up my whole portfolio. And I had Stag and I had O. So technically I was getting $100 a month. And then I was like, I want more than that. You know what I'm saying? Because I'm hungry. So I'm driven for that. So I want to be, like Warren Buffett. You know what I'm saying? I want to be dividend guru, dividend guy, whatever you want to call it. You know what I'm saying? I want to make millions and billions back in dividends and all that good stuff. So right now, where I'm currently standing with monthlies, I'm sitting at $419.27 with the dividends that the dividend stocks that I own. Over the course of the whole year, that brings me to about $5,031.29. So, on top of what I make now. So that consistent flow, get money from work, both my job and both dividends. And then, you know what I'm saying? Hopefully I can see you up there, you know, with the rest of us. So we talked about the stock that you chose. So how much are you going to invest a month?
200.
200. So if you did that with being what it is, yeah, it's on with that over there. So do the math here. After hours, is at $66.63. So if you put in 200 right now, you'd have roughly about 3 shares right off the bat. And then it's 25 cents a share. You know what I'm saying? So that's what? Oh, snap. I done messed up. I messed up again. Oh, my goodness. So, yeah, so 75 cents, which is not bad as starting off. You know what I'm saying? Once you start getting to the dollars, $5, you know, $10, $15, $20, $25, $50, then, you know what I'm saying, snowball effect with you putting in money. It's just you can just keep feeding to it as well as feed itself. And then you have one or two options. You can either keep feeding into it, you know what I'm saying, which will, you know, definitely compile more, or you can just have it feed itself and just have like a revolving circle and just have it keep going and you just forget about it and just let it do its thing. Of course, it's going to be ups and downs, but you know, what doesn't? But other than that, I think that concludes the main topics. You know what I'm saying? What dividend stocks are, you know what I'm saying? How often they pay out for whichever one that you decide to get into. And then, what is it? I'm trying to think, because I lost my train of thought again. It's funny because I said I wasn't going to edit these videos. And, you know, there's often times where I get too far ahead of myself and I start having brain farts. And I'm like, dang, what the heck was I talking about? But yeah, so you're going to invest $200 a month into which is going to start you off with, you know, 3 shares. Yeah. Is there any other questions that you have?
Nope, that should be good.
Man, look at this. This boy is over here, you know what I'm saying, pen to paper. You know what I'm saying? What did they say when you put pen to paper?
I don't know the saying.
Oh, I don't know the saying.
Pen to paper.
You put pen to paper, you know what I'm saying? I guess you could say like you committed, you know what I'm saying? You can make it come to life, you know what I mean? So now you're obligated to do it for the most part. So before I forget, I don't think I said it, you know what I'm saying? I made an intro already before I added you on here, but you know what I'm saying? Your boy's not a financial advisor, but if you have questions, I'll be more to answer them to the best of my ability. I'm always learning. I'm still learning and always hungry for more. Anything you got to say to the people or anything you want to add?
Nope, that's all. Basically, I'm ready for this whole journey and I'm be growing with him, even though I'm be growing lower, but he's still growing as well. I'm just kind of pointing at him.
Yeah, still growing. I don't know. I might, you know, probably once your boy gets decent enough, I might start another one and then start from the bottom, you know what I'm saying? And then add my own journey that way, you know, we can, for the most part, be on the same part, but you'll be way ahead of me before I even start that smaller account.
But you got more money to invest then.
Huh?
And you still have a lot of money to invest. I don't know. I may be at 210 at that point, 210 a month.
Yeah, I write everything right here on my calendar. You know what I'm saying? When I get paid, I write on the calendar. That way, you know, I'll make sure I keep an eye on that just in case nothing goes wrong. Also, another thing that I highly recommend, 52-week challenge. 52-week challenge is a challenge. What happened?
Let me hear it.
Oh, you was talking while I was talking, so I didn't know if you were trying to say something. But yeah, the 52-week challenge is a challenge to where you also save money by putting it to the side. You know what I'm saying? I would definitely put it in savings, like your savings account, because savings, you know, it doesn't have the best. It doesn't have the best interest rate or return or whatever, but you know, it's a fairly amount. So each, like, just say for instance, every Friday. So every Friday on my board, I have it up here. I have a dollar amount, but since me and my wife are doing it, it's times two. So right now we finished off last month, and the first month was $20, $35, $45, and then $125. We would put it on the week. I don't know if I can show it to you because it's kind of bright. So this is it right here, 52-week challenge. You know what I'm saying? We finished February. We finished with 50. We finished with $537 out of 350. So we're already ahead of how much. So technically, by the end of the 52-week challenge, when you're saving this money, by the end of the year, you should accumulated you will have accumulated $5,000. So that's the 52-week challenge. So it's out there on the web, the internet. All you got to do is Google, type in 52-week challenge, and it should show you. So, but yeah, man, that's about it. Before I forget, did I already say? I'm gonna say it again. If I ain't say it, I'm gonna hear it again. I'm not a financial advisor. Man, you know what? I've been trying to get in contact with Keenan Grace. You know what I'm saying? That boy got the coldest intro when it comes to investing. You know what I'm saying? It's weird because my wife is like, I don't know how you memorized it by heart, but you know what I'm saying? Keenan, if you see this or if you hear about this, man, don't sue your boy. I'm on your side. You know what I'm saying? I'm part of your Discord. So, but his intro is, this is not financial advice. What? Oh, man, it's crazy. I already forgot. What did he say? He said, this is not financial advice. Oh, man. I want to get this too, because it's like the coldest one I've ever heard out of anybody. Let me get it in the head. Like I had it prepared. What is it? Oh, this is not financial advice. I just hope you brought your oven mitts, baby, because it's about to get hot in the kitchen. What did he say? He said, dang, man. Oh man, I want to say it so bad. I have to memorize it another time, but as far as the intro is cold, what do you say? This is not financial advice. I hope you brought your oven mitts because it's about to get hot in the kitchen. It's like invest in, I don't know. Man, I done butchered it. I'm sorry, Keenan. You know what I'm saying? I had your thing memorized to a T at one point. It hurts to say because you know what I'm saying. I'm a fan of his. You know what I'm saying? Coldest intro in the game. Coldest. But I'm gonna get it down. Keenan, don't sue me, bro.
You gonna sue me for that? Really?
Don't sue me. I don't know if he had a trademark on that or you know what I'm saying, whatever. But yeah, that's like the coldest. Matter of fact, let me see it. Because I now that I butchered it, now I feel like I have to do it justice. Man. And it's crazy to watch when I hear it too. I'm gonna be all the way off, and I'm gonna be mad at myself because I follow this man and I'm in his Discord, and I've had like a slight conversation with him once. Oh man, my heart's breaking. I'm sad. I'm slipping.
Oh no,
I'm slipping. Let me see. Oh man. Damn, I feel like I'm about to get sued for this. You didn't ask me? Well, I mean, I texted him.
Completely.
I texted him, but he never replied back.
Gosh.
Oh man.
Yeah, it's copyrighted. Just a wrap. Short journey. It was a wrap. It was good.
I feel like he doesn't even do it anymore. Like he does, but he'd be adding some other stuff. Man, these commercials, man. Oh yeah. Okay. Okay. He just gave me a quick, but he was like, "This is not financial advice. I just hope you brought your oven mitts because it's about to get hot in the kitchen. Now, don't invest in companies that you don't trust or don't believe in, because if they dip, you're not going to buy the dip, and then you're going to sell low. And then what does he say? He'd be right back here crying to me. So he said, if you ain't ready for these hot stocks, then consider investing in index funds or something like that. But yeah, Keenan Grace, you know what I'm saying? That's the boy, you know what I'm saying?
Bar.
It is a bar. It should be made into a song on everything. But yeah, man, I'm gonna let you go. Appreciate you coming by, talking to, you know what I'm saying, talking to your boy, you know what I'm saying, my right hand man. It's like it's like having another sibling, you know what I'm saying?
Yeah.
Little brother.
It's there.
But yep, so this gonna conclude season 1, episode 1. When do you feel like we should come back for episode 2? Next month?
Yeah, monthly would be good, actually. Yeah, monthly.
We should come back every month?
Yeah.
Well, you know what? You know what I'm saying? I'm gonna go ahead and ask the people. You know what I'm saying? Go ahead and let me know in the comments, you know what I'm saying, how often we should do this. I mean, he is investing $200 every month. So, or should he invest? Should he invest twice a month? Who knows? That'd be $400 a month. I don't know if you got that kind of bread, but
talking to me then.
Talking to the people. For the people, by the people. But yeah, man. My mouth's kind of dry. I feel like I should have had a cup of water or something nearby. Yep. See, I'm slacking. See, you can learn from your elders, you can learn from young people too. Innovative state of the mind. But all right, then I'll go ahead, you know, holla at you the next one. But if you're new to the channel and you like what you see, like and subscribe to your boy. You know what I'm saying? But signing out. Appreciate y'all. Peace.